Hey everyone, I'm Jen. Welcome back to another episode of Blockchain Banter Trading Crypto. I am here with Keith Allen, TA and algo trader, co-founder of Material Indicators, along with Crypto Corio, data scientist and narratives trader, and Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Corio, I was hoping this week you might be able to start us off with some of your narratives. I don't know what you've been keeping an eye on this week. Well, I mean, I have because I follow you on Twitter, but maybe you can tell those who don't or who are unaware what you've been really keeping an eye on, what's been grabbing your attention, and kind of maybe just give us a little bit from your dashboards, which have, by the
Absolutely.
way, been performing amazingly. I saw how much attention they've been getting. Congratulations on that. That is not, you put a lot of work into that.
Yeah, thank you, Jen, for your words. And yes, it's great to see that people are using the dashboard. It's one of the most popular dashboards on June now, and it's growing really rapidly. I'm really happy to see people using it. Let's go on the dashboard. So here is the dashboard. Here is actually my account on Dune, CryptoCorio, Dune.com, CryptoCorio. As you can see, the two narrative dashboards are the most popular ones with the highest number of stars. The one we will be focusing on today to talk about different patterns and narratives is the second one. By the way, I've recently done an in-depth video about how to use this dashboard, and you can find it here. The link is here. Now let's go and see what we see this month. Let me zoom in a bit. Okay, it's better before because now we can see all the narratives. So here we can see the list of all narratives. We have 30 of them, and we can see the performance in this month, MTD, month to date. And so here are the best performing narratives and the worst performing narratives. Each narrative has usually a minimum of 6 tokens or assets that it constitutes the narrative, and you can find the details about each of the narratives in the second section of this dashboard. So right now, what's happening, what can we see? As we talked last week, the meme narrative is one of the strongest. It's the strongest, actually, this month. It was one of the strongest last month in February, but this month, the trend has been continuing strongly, and so it is by far, actually, by more than 2x from the second one, is the best performing narrative. So there is no doubt there is kind of a bull market sentiment here, and we know that in such environments, memes and with as we discussed last week as well, new retail users, all of these things are very favorable for meme coins. So this is one thing. We can then, I will talk about the details of the memes later, but what other general trends? Again, AI is something that's consistently in the last 5 months, 4 or 5 months, I would say, has been ranking among the top 5, 6 consistently. So it's probably the best performing narrative, I would say. If you come down here, I recently added a new leaderboard, what I call narrative leaderboard, which is giving points to the best narratives on the last 6 months. Positive if they're among the first one, and negative points if they're among the worst 5 narratives of the month. And then we aggregate all these points, and then this gives us the narrative leaderboards. And as you can see, the AI narrative is among the top 2. There is also identity, which is the Ethereum name service, ENS, which has had a good performance in the last quarter. But also WordCoin, WLD, which many might argue that it belongs to the AI narrative. So if we actually put a WordCoin into the AI narrative, then the AI narrative would be first by a large margin. So this is a really clear pattern that the AI tokens have been performing very strongly. Again, we will talk about the specifics of what are the AI tokens and the details a bit later, but let's stay with this chart for now. What I'm seeing here that is very interesting is a strong comeback from the GameFi narrative. Now, if you look at this section, it's showing actually narratives that were not particularly having a great performance in the last month, as you can see here, but right now they are performing really strongly. And this has been the case for GameFi. If you look at the last month, you would see that GameFi was not among the best narratives. But now, right now, there is a clear pattern where we are seeing GameFi here. And as I've explained this before, usually when there is a narrative that comes to the top, to this section here, to the top narratives, there is something strong going on, because here we are actually comparing narratives to each other. And so this means it's outperforming the market and the other narratives, and so there is something to pay attention. And it's there, and so GameFi is certainly one of those. A DePIN, so decentralized, infrastructure protocols, are also have been among the ones that had generally a good performance. Again, if you look at this section on the leaderboard, you would find, maybe I haven't. Do I have the pin here? Risk-adjusted returns are really good for DePIN. I haven't yet probably added it to this section, but in general, over the last month, they were good, and we are seeing that also DePIN is one of the narratives that is having a good comeback. So generally, not maybe one other thing to pay attention is the narrative belonging to the centralized exchanges. I also talked about that. Usually, this is not a narrative that performs well, and it's usually among the worst performing ones. It has been consistently in this region in 2022, 23, but now it's performing for what it is. Usually, its position is performing really relatively well, and this actually is because of retail coming back to centralized exchanges. And so, if we search for some of the narratives that belong to some of the tokens that belong to centralized exchanges, for example, BNB or Crypto.com. We mentioned that, I think, last time. These are all having good months. So KuCoin and Binance, Crypto.com, Gate.io, and all of these OKB. We are seeing that these tokens are performing strongly. And this means that there are new retail coming to crypto. So now, if we zoom in now that we know what are the different trends where we should pay attention, for example, GameFi is, I tweeted about GameFi today, so we can go and look more specifically about, this is the token breakdown, the second section of the narrative dashboard. We can see different GameFi tokens. We discussed with Mark last week that you should always use ETH or BTC as benchmark, not USDT, especially in a bull market. So you can see, for example, here APE, this token APE, has been consistently underperforming ETH in the last 6 months, but there are now some good, some GameFi projects that are performing really well, like ENJ and Gala and Sand here recently, and YGG. And so here you can see the performance of the specific GameFi narrative, and what tokens are performing well. As you can see, all these games are, they're having very good returns. So some of them, they are old generation games like Gala and Axie Infinity and Engine. Some of them, they are more like infrastructure, like Chromia and Immutable, but everything is performing well, which, as we know, it's a new trend, and GameFi wasn't among the best performing ones. We know that there is a trend here, and there will probably be continuation. So me as a narrative trader here, when I see that, I would bet on a continuation of this trend, especially when I consider the context, which is, okay, we are in a new bull market environment, and we know that from what we saw from the centralized exchange narrative, we know that retail is coming back. We also see that on the sentiments and on different social related or off-chain related metrics, as we saw, for example, on Google Trends. If you put Bitcoin here, you would see easily in the last month how this has been going up, as you can see here. So there is a kind of trend where compared to the bear market, we are going up. We are still not far from, the bull market euphoria in 2021. So this is kind of good news, meaning that at least when we consider this metric, there is more to go. There is more room to grow, but it's the highest value we've had since 2022. And this was a kind of short-term hype maybe, but this is a more consistent uptrend, as you can see here. So I think this indicates kind of like we are like maybe following the same trend that happened here. As you see, during the last bull market, things can grow actually quite fast. So from December here, 22 to the top, like close to the top, it was like in January. So the retail can come back very strongly, and this usually happens when we are in all-time high region. So all these things indicate to me that there is now a new inflow of retail users, and we know that retail users like two things. They like memes and they like gaming. It's not just that they like gaming, is that it's an easy way to make money for many people in many regions of the world. So some people, they might not even trade these tokens just for the sake of price appreciation of the token, but they just might play the games in order to get some of these tokens and make some money. So this is again some of the indicators that we could use as the sentiment of the market and how retail is doing and how much new retail presence we have. If we check the meme narrative, we can see here different memes. And as you can see, look at these returns, like really strong returns here for all these memes. And by the way, these are memes, like these are really different category of memes from different blockchains and different, like some of older, like Doge and Sheep, some of very new, like Hemule, some are on specific blockchains like Grok and Bonk, which are on Solana. Bonk is on Solana. This one is on Avalanche. This one is on BNB. So really, there is a different, all sorts of. Trump, for example, is like a political meme. So, and this one relates to the, kind of, as you can guess, is a meme coin related to Bitcoin. But all of these meme coins are performing very strongly, which means that effectively we can confirm that there is actually a meme narrative and a meme season, which again confirms the bullish sentiment of the market. And finally, if we go to the history of narratives, as I always like to go there and see, what happened in the past, etc. We mentioned about GameFi. So if you put GameFi here, the last time GameFi was among the best narratives was, peak of bull market, November 2021. You remember Axie and Sandbox and all these games that were really going up strongly in the peak of the bull market. It happened also in October. It happened also there, GameFi in July. This was Axie probably, and also this was Axie again. So last time GameFi was among the three best performing narratives was in the bull market, and now we are seeing something similar.
At the top.
Yes, exactly. I mean, that was the top. That was not the top. So if we go back to if we go to the charts now that's maybe a good introduction to go to the charts. And if you go to the weekly, so like look at this very typical crypto chart. So a very strong performance from the start of the bull market on Axie here. And probably it's better to look at the BTC pair because that will help us. That's not here. Here we can see better. So look at this performance, how strongly Axie outperformed Bitcoin all through 2021. So it started, as we said, February and June and July, and even here. And if you remember, June 21, July 21 were not really good month for crypto, right? For Bitcoin, etc. If you look at Bitcoin performance in June 21, June, July, you remember it was just after that initial dump that we had in May. I remember that well. And then during the summer, it was very calm, nothing really happening until maybe late July. But if you go on Axie, because there was a GameFi like kind of narrative, Axie did well, as you can see, did extremely well in July and outperformed the market. So there was definitively like some GameFi narrative that was performing well, and we are seeing now maybe a bit of wake up from the gaming. And look at this bear market and the GameFi, like 97, like 90, oh yeah, 98% from the top, which lasted almost more than 2 years. So now it seems that with the bull market coming back, we are back to the environment where this kind of more gaming and memes can perform well. Now, to follow up on the technical analysis, now let's go on Bitcoin and talk about Bitcoin. We talked about last week about Bitcoin. We were already at all-time highs, but I mean, we were in the all-time high region, but now I know that Keith likes weekly candle closes. So we close actually above that. Now we are clearly above that. So I think we can talk about a breakout even on the weekly time frame. And now the price is 73K. And so the trend is still continuing. If you look at, I shared a few days ago about the strength of this candle, which is phenomenal. And you don't see much of such candles, maybe here, and usually there's continuation, right? And usually we discuss that this happens. Let me go on the Bitstamp, which has more history. So we are, if we have to draw a parallel to last cycles, like here and like here, we are just at that region around here, I would say, and around here, and around here compared to last 3-4 cycles. So if we zoom back, and we're seeing more than 10 years of price action here, which shows some
wow,
shows that is the level. No problem. So you can see what happens every time we break out of the previous all-time high. Now we know that always there is some kind of reaction when we are at a strong resistance. So this happened in 2017. We went there. There was rejection. Then we went up, and then there was a pullback, a beautiful retest of that line. And then finally, after the retest, we went up. But it's never the same thing exactly. Here again, if I zoom, we went there was pullback again, but then there was no retest. So again, this is important for traders to notice. Here we had a retest. Maybe some more conservative traders were waiting for that, and they had it, but here they didn't have it. So if you don't buy here and you want to buy the pullback, then guess what? There is no pullback, and then prices go up like what? Prices go up like 3x in just a few weeks, or few months. So here we are in that kind of environment, and so if we know that there is a lot of diminishing returns with every cycle here. Look at those profits here. Obviously, much less. But if we draw a parallel, like let's do some speculations. If we zoom out, okay, this brings us to such numbers which I cannot really see, but it's like in the order of 200K or something. And even if because of the law of diminishing returns, we say that, okay, maybe now it's half of this, it's already at 150K. And these things can happen quickly, maybe in 2024. I know that Jen, you took notice when we did some speculations on the end of the year.
I have it here. You can't see it.
Those might be out the window at this point. We'll see.
What number did I say?
Is what I would say. I mean, it's not my area of expertise. I'm just happy to have you guys on here with me. Corio, you said 80 to 90K.
Okay.
Keith, you said 75 to 85K. Mark, you said 60 to 70K. Now, remember, this wasn't the highs. This is where the year ends.
Yeah,
okay.
Exactly.
So you're saying there's a chance.
You still got time to be right. I don't know if you want to be right anymore at this point, but I do. I have my notes.
I
Right
welcome
there.
any opportunity to buy lower. First of all, I gotta say, Corio, that was a show right there.
Seriously.
That was amazing.
Yeah.
Thank you. Thank you.
I've got some questions.
Yeah.
That if you could take it back to the dashboard. One thing that really struck me is that you were looking at the centralized exchange coins as an indication that new money is coming in, but you supported that by saying that the fact that you're seeing a spike in meme and game coins alongside that, is that really what the picture is, or do you think that just the flows to the exchanges is enough to quantify that?
So I would say there are different kind of retail users. Some of them, the most beginners, probably like everyone, myself included, we start with centralized exchanges. Doesn't mean that only beginners use centralized exchanges, but it's the easier way for them to start. So when there is a new bull market, we certainly see a lot of new inflow, new creation of accounts on centralized exchanges. And as you know, most of them, they require you to hold some kind of their tokens. And so this is very interesting. So in this chart, we are seeing the narrative and tokens that are closest to their all-time highs. And again, for the first time, these patterns are really interesting to me. We have two centralized exchange tokens. So we have here OKB here, OKB, which is a popular
Right.
centralized exchange, and you can see that all-time high. And we have also MEX, which is another centralized exchange, which is also at all-time high. And by the way, look at that. Last all-time high was in the peak of the bull market. And so look at what happened from, here was the start of DeFi summer, right? So you can see how centralized exchange tokens react to this kind of environment when they have a new inflow of users. And
well,
so,
but if I, to that point, okay, so lots of people use centralized exchanges, and institutions certainly do. So it's not just new money that's making that, or new users that's making that happen. If you're using the centralized token to pay your fees, which is typically the case on Binance, right? BNB is used to get a discount on your trading fees. So if the institutions are increasing their volume, that also is going to impact those coins.
absolutely, yes. And also, let's say that there are these exchanges offer a lot of services that where you need to hold their tokens. For example, Binance has a launchpad, and to be eligible to, for anything that happens on their launchpad, you need to hold BNBs, and a lot of BNBs, depending on how much you want to, to allocate to these launchpads. So all of these things makes that there is buying pressure on these centralized exchange tokens, and then this leads ultimately to this outperformance of centralized exchanges. And so, yeah, we are seeing like these are, for me, as somebody who observed this since long time. When I see these centralized exchanges after, this is maybe something that is happening after 2-3 years, that we are seeing some kind of centralized exchanges in their all-time high or being among the best performing narratives. So, and then you correlate that with what we said about, the Bitcoin, trends on Google searches and everything else on gaming and everything that we generally contribute to the retail presence. And also myself as a content creator, I'm just saying it's very obvious for myself and others, the growth that we are seeing on Twitter recently is
right.
much more compared to a few months ago. I don't know if Keith, you're observing the same pattern, but I'm seeing that across the board on crypto Twitter.
Yeah, and my other question was, do you, are there any patterns that you detect in terms of the speed or velocity that a narrative will fade up or fade out of the top 10? For example, I remember it wasn't that, it doesn't seem like it was that long ago that DeFi was one of the top narratives, and now it's one of the worst.
Absolutely. Yes. So this is a very interesting question. I think I have two things can help here. DeFi, history of narratives. always look at back in the history and see what happened. So here, as you said correctly, if you look at DeFi, in 2023, it had some good months, 3 consecutive months where it was among, here second, third, and first, and then there was nothing in November. So from
Look
the
at May to
history,
June. Look at the difference between May and June of 2023.
yes, but this probably is because some new tokens launched and they went just from 0 to something,
Right.
which means that they have really a very high number here. But this means that the history shows that this narrative can have 3 good months consecutively, at least from what we can observe since its creation. And so right now, the last one was in November where there was no follow-up, and then we are not seeing anything. So this shows that the longest history of DeFi, outperforming is 3 months, and also it shows that from the last time it performed, it took around 4 months to outperform again. So here we are around the 4-month, mark, and maybe that's. I mean, we have little data, right? This DeFi is a narrative that just came in 2023, so we don't have too much data. If you look at other narratives like NFTs, you will see that they have much more rows here, so you have some more data to work with, or L2s, etc. So this gives you more data about historical performances and how long a narrative can last. So this is one thing that I look in history of narratives, and then ultimately also this one. So this one here, you have an index of all the narratives, and so you can see. I'm just for the sake of illustration. So here is DeFi. It came out of nowhere, and look at this performance. Very strong performance here on this side. Just to have a benchmark, we can put here the Bitcoin narrative, and you can see how strongly this performed against the market for a few months, and then it had a really strong crash, go back again, and crash again. And so if you compare that, for example, to the AI narrative, which we know since since October has had a really good performance, we can see that this one can, AI is showing us that it can trend for many months, but DeFi has this pattern of, kind of pump and dump kind of style that we can even see in narratives. So this is how I see the length and duration of different narratives.
So it seems like DeFi has, more one-offs that come in, get hot for a little bit, and then fade out, whereas AI more broadly as a category may be performing better.
Absolutely, yes.
They both seem to know once they take off, they really just take off. I mean, AI had a little bit more of that introduction, right? It was kind of like that teaser. Where like DeFi just kind of out of nowhere. Since we're back on the narratives, I'm looking at the time here, so I want to move on. Keith, I know that I wanted you to talk about your charts next, but Mark, I also know that you have a hard stop at the top of the hour, right?
I can probably keep going. Let me see. Yeah, it should be okay if I'm a little delayed. It's not a big deal.
Okay. Otherwise, if you want to go into the memes, you can. We can go in either direction, as long as you guys are all okay on time.
No, I love hearing from Corio and Keith. I'm not leaving until Keith has showed us the material indicators.
All right, Keith. Corio, thank you so much for sharing all of that. Like every single time, I love this new format, I have to say, because doing these sorts of walkthroughs, having that visual to what you guys are saying, just adds.
It's a game changer.
It's a huge changing factor for that. So one, incredible job on all of that. Two, I absolutely love the fact that you're on here sharing it with us. So thank you.
My pleasure.
Corio, can you show us that last chart where you had DeFi isolated with the volatility on that chart, and that's going to illustrate a scientific term and a point that Mark and I like to make, and it's called no straight lines, right? You see that just huge vertical ascent, and what is it followed by? Okay, now I'm not indicating that we're going to see necessarily the same thing out of Bitcoin. However, as Corio just indicated to us, you know, in the prior bull markets, we've often, not always, but often seen a pullback to that, you know, to that prior high before we see things really take off. And we have, of course, seen some resistance here. So to illustrate that, I'm going to
and you just to confirm your point, look at the memes actually narrative, which like we saw in 2021, you know, again, sheep Doge, look at this, you know, this was sheep here and Doge, just these two. And then look at what happened next, like
and look at you know, and lay Bitcoin across that, okay, as well. Because you said that these two narratives, memes, and GameFi, for example, and we were just looking at DeFi, are things that that new traders like to get involved in, and that ascent represents a lot of people making money, and that descent represents a lot of people getting absolutely thrashed. So you have to protect yourself. Up only goes for so long. And so when things start feeling toppy, isn't the time to get greedy. It isn't the time to FOMO in and throw your risk management you know, rules out the window. If anything, it's time to clench a little bit tighter, in my opinion. At least that's how I trade. So let's start over on the candle chart and look at where we've been. I'm going to try and it's going to save the window. That's okay, because I'm going to move. So I will save this window, and let's go here. And hopefully you guys are seeing
You're totally clear. We can see it.
Okay. Yep. So we had this, you know, it took a while to form. It took years to form. We had a perfect classic cup and handle formation. It started with the all-time high here at 69K, bottomed out here at the FTX dump around 15.5. And of course, we came back up to the all-time high. What makes this pattern, in my opinion, really valid and important is the fact that it is truly a macro top to bottom of the market structure. And so as we were approaching the all-time high with the crazy amount of demand we've seen on ETFs, we didn't know if we were going to get any pullback at all. You know, was price going to shoot out the top, or were we going to see a little see a handle form? And we did obviously see something in the form of about a 15% pullback. Yes, we all wanted to see 20 or 30%. We didn't get it. And so the question is, are we going to see those kinds of corrections in this new ETF environment? And are we lucky to have gotten the 15? Or might there be a deeper pullback coming at some point? I don't think you can ever rule that out. And history has shown us that there's certainly plenty of history of large pullbacks happening in bull markets. And I'll go ahead and show you some of those. You know, I got to zoom in more. Okay, look, here we go. This is back to 2017 run. That was a 40% pullback in the bull market. We had another 40% pullback, and they go all the way into, you know, our prior bull market, 20%, 20%, 30%, and the big one, 56%. This is where distribution started in the last bull market. There was a big sell-off and then a distribution rally up to the all-time high. When we look at fire charts, you'll see that we actually saw whales selling pretty aggressively here at this point. So now back to kind of our current situation where we did get a little bit of a pullback, and then, you know, I don't know about you, but I didn't expect to see 72,000 yesterday. It happened, you know, so and glad we got it, and it took a lot of coins with it, right? We saw Litecoin and XRP. When's the last time XRP had a 20% anything that wasn't down? So that was pretty amazing to see happen. And I personally, because of the fact that I felt that some of those things were getting toppy, I closed those positions last night, and we'll look for new entries. And well, we just might get those. So let's just say that we have a correction from here. We're running into resistance, and I'll show you that over here on fire charts, and then we could talk about where we think we might go from here. I personally think that we're running out of structure, right? We're in price discovery mode at this point, and if we look at the lifetime structure, I see that. Let me clear out all these silly little downtrends. You guys got the point on that, right? We often say that lines are subjective, and they certainly are. So this is no exception. You may draw your patterns and your channels differently than I do. I can tell you that the reason I laid this parallel channel right where I did is because it correlates with losing the 200-week moving average and then a fight to get back in it, which was rejected time and time again, week after week, week after week, week after week. So that's where I'm laying that line, and that's where I see the next potential area of resistance and rejection. And as we look at fire charts, we can see that's exactly where ask liquidity is stacked in the charts right now. Let me refresh this for us. I've had this sitting here for quite a while, so let me refresh the screen, and we can see that we have lots of ask liquidity overhead right in this range, in the 74 to 70, really from where we are to the 75K range. And what happened last night, or in the overnight hours, I should say, is we saw some bid liquidity disappear. Oftentimes we can see it move. We can see it move, or we can see it move down, or we can see some market order activity, that it was converted. This is an instance where I don't see any of that. It looks like it was just pulled from the books completely. And so if we apply some filtering here, we can maybe see a little bit more clearly what has faded out of the picture here. So this, to me, means that maybe, just maybe, sentiment is fading just a little bit in this near range, and that the market might want to see a little bit of pullback, and maybe the economic numbers had something to do with that or not. I don't know. But I think that everybody would be very happy to see price pull back, at least to, retest the all-time high would be nice. Again, I've been looking for these pullbacks. A lot of us have, and they just have not materialized. So strongest support right now is in this 60K level. So, that could also get rugged if price shoots down this way. I'm going to zoom in a little tighter here to the daily chart, and we can see what's been happening here. And you can really see here where a lot has been rugged out, right? This has just been pulled. It's gone. So where do we go? We see some selling. We see, the last 24 hours, there was pretty decent sell pressure. We went down and tested that 71 range, and we seem to be there again right now. So we had a, kind of a micro version of a double bottom. We now have support that just popped up into this range here, just sub 72K. Let's see if this holds. We've had a couple of moves like this where bid support came in, got filled, and then price moved down a little bit more. So that's kind of what I'm watching here. Of course, this red class has been on this buying spree since like Christmas time. So, I expect that to continue. Of course, anytime that they pull back, that's kind of like easing off the gas a little bit. So that's when we see these downside moves. They haven't been very big so far. Looking deeper into the order book here, you can see that a lot of the bid liquidity that was down here before, you remember we had targets that we were focused on when we had liquidity in that area, and we had lots of how should I say, consolidation in those ranges before we got up to this level, right? We spent a lot of time in that really 40 to 45K range. We had great bid support down here in the mid to high 30s. That of course has faded out. A lot of it came into the active trading zone to push us up, and you can see it kind of stair stepped up here. Moved from here up to here. That was a huge move. This was absolutely monumental. We had some, I was really focused on, potentially getting a pullback to this 52K level before we broke out, and price just ripped through 52K and then ripped through the 58 to 60K range, which was an area of prior historical significance, right? We zoom out to the long-term 3-year chart here. We can see that there actually was some confluence at that level around 58 to 60. So I expected things expected it to take a little bit of time to get through that, and it really didn't. I mean, it was like in a day we were through it. So the fact that we didn't have any friction going through it on the way up was a bit of concern for me. That historical friction still exists there should we start to pull back towards that level. But again, I led this off with straight lines are scary, because straight lines, there are no straight lines. They don't tend to age well. And this is a little bit scary to me. Now, if you look at history, right? Sure, we had those moves, those big moves up. They happened, but what happened after that? This is that 56% correction. Okay. So keep that in mind as you are trading, for your long-term game. Obviously, the outlook for Bitcoin is very, very good. I agree with Corio's targets. And I think, gosh, I wish I had that chart available. I saw something. I think it's from Plan B, who has the stock to flow models out, and I vaguely remember that he had this cycle pushing into that, like around that 150 range for top of market, which would just be like epic. It seems like things are happening really, really fast right now, though. So that's my big concern, is that maybe this bull market doesn't run as long as some of the others have. I don't know if you guys have any thoughts on that, Corio, or do you think that we're potentially in an accelerated market at this point?
I think that we should be cautious when comparing Bitcoin price action with last cycles, because now we have institutions that are bidding heavily, and so previous models like stock to flow or any other model, and now maybe will fail to integrate this new component that is just something that is no model has integrated. So I think that is, if you look at the Bitcoin inflows, it's still, we are getting weekly records still, like 2 months after the event. So looks like even with the halving coming, we are getting, there will be a lack of sellers, and so which means that if you look at this, it can go much higher in a short amount of time. I would like to also mention a post that I recently shared about time sensitivity versus price sensitivity, and I believe what you're saying, Keith. I believe you're being too sensitive to the price, just because there are some momentum indicators that are overbought since long time, and we would like to see a correction. But if you consider the time element and what all these institutions, how they're coming and bidding, etc., then I think this is now is a time to be more to pay more attention, not to price, but to the fundamentals, and the time that, okay, now we have these inflows. And even Mike Saylor, I saw today that he has bought again thousands of Bitcoins, even at this price. So it tells you all the buying pressure that is out there on Bitcoin, and so this can easily bring us to 100K or these such numbers without any pullback again. So I don't see this. It's important to realize that.
Yeah, I agree that the long-term outlook, likely gets us there. And in terms of the interest, these ETF inflows have just been remarkable. Absolutely remarkable. I think Bitcoin has surpassed silver in terms of market cap, and the ETFs have surpassed every other ETF in history in terms of their rate of growth. BlackRock is really dominating. Yesterday, they had another 563 million in inflows. Interestingly, I would think that at some point the Grayscale outflows have to taper off, but they're really not. Another 500 million out the door yesterday for them. But I maintain that I think that Grayscale rather has an ulterior motive here. You notice the fees of all these different ETFs. BlackRock is just 0.12%. A lot of these others like Fidelity and Bitwise, 0% for the first 6 months or something like that. And I think Bitwise is donating 10% to devs, which is awesome. And look at over here, Grayscale, 1.5%. They've had over 10 billion with a B in outflows since this started. And guess what? They've generated 150 million in revenue from those outflows. So they've got some heavy bills to pay after the FTX debacle and the lawsuit from the Winklevi over at Gemini. So maybe they're just trying to mitigate some of that expense and generate as much as they can. They had obviously larger holdings than anybody coming into this, and they still do, right? They still have quite a bit, right? They still have twice as much as BlackRock does. So that's something to consider in terms of those outflows here. So back to the Bitcoin chart. I'll zoom into the daily here and see if we've seen anything significant change here since we first looked at this. Yes, there's local support here at the moment. There's still some selling going on from all classes here. So I'm not convinced that this is settled yet. I would be thrilled with a pullback back into that range, back into that line of where support was to really validate the RS flip of this move right here, and then be off to the races. We did get, it was really significant that we got a weekly close above that all-time high. It was above. I know it was above on Bitstamp. I know it was above on Coinbase. Interestingly, I think it was just below the all-time high on Binance. But what I look for at this point is actually to see full candle bodies above those areas. So let's see what happens with this week's. With this week, actually, it would be next week's candle to get us up there and see if we get another one up in that range. I want to zoom out a little bit here and just look at where, give you maybe some confluence with where we could be going from here. Because again, there aren't a whole lot of lines left in the chart, right? We're going to start working on some other geometry to see if we can find some other, potential ranges of resistance. But this is just price discovery from here. So if we make it back into this channel here, and it stands to reason that we will. The question is, do we go straight up or do we chop here a little bit before working our way back in? And I maintain that those areas that many people just call chopping and crabbing, and people get so frustrated with, those are really, really important to have in the chart because they are areas, they're building foundations for strength. So if price comes back down, that would be an area of potential support. If price shoots through it, it will be an area of potential resistance coming back up. So I look for those areas of consolidation. I think that they're important and they're valuable. And I think that it's much healthier to have that, as we did here, than to just shoot straight up. So that's kind of what I'm looking at this point. Hope that paints a relatively clear picture, at least clear, somewhat, maybe a little bit clearer than mud, but that's about where I'm at.
No, it was wonderful.
Keith,
Thank you so much. Oh, go ahead, Mark.
Yeah, Keith, could you comment quickly on the normalized volume on the
sure,
on the charts? Because the like one of the things that I pay attention to that I'm not sure many people pay attention to is the which is one of the reasons I love Fly Charts, is that it is bucketed the way that I want it to be. But essentially the low order amounts are basically at an all-time low. right? Like this is it's contrary to the returning retail perspective.
So this is, so first of all, we have two views here. The normalized view is on a scale of 1, right? And these are not necessarily scaled relative to each other. They aren't scaled relative to each other at all. They're scaled relative to themselves. So, which means that this yellow class of $100 to $1,000 sized orders has basically sold the most that they have in this 1 month period, right? And to the contrary, purple maxed out for this time frame here. Now, these values that you're seeing are just that normalized value. If we want to see what that looks like in dollar amounts, we switch over to the absolute CBD, and that shows us dollar values, right? Here we can see that smaller class has sold 800, a net, bought and sold a net of 856 million over the last 30 days. Meanwhile, those brown mega whales have bought 84 million, the purple whales 89 million, and that shark class, those red ones, $10,000 to $100,000 orders, nearly $2.5 billion worth in that same period of time. Something that's also interesting here, and I'll take it in a bit for this. I want to isolate this brown class here for a second. Historically, purple has had the most influence over Bitcoin price, and so and the reason for that is because even though brown has larger orders, purple has far more orders, and so just the sheer volume has had the most influence. But typically, this says that this bucket is $1 million to $10 million orders in order size, and the average for those really isn't that large. Typically, they're $1 million, $1.5 million, maybe up to $3 million. Every once in a while, you see one in the 5 million range, and maybe even 7 million. This past week, I've seen really the largest moves that I have seen in the history of looking at this chart. Okay, so this is 1 week. We're looking at a 1 week time frame. So it started at 0. They started selling. As you can see, you're looking at the bottom number here. They sold and they bought their way back up a little bit. And then when we started approaching that all-time high, we started seeing big buying. And the reason that they can only, the reason they did it at that time is because of all of this liquidity up here, right? That minimizes the slippage. So look, you're going to see the contour right here. So they were pretty much at $1 million, and boom, $10 million order. That's a $10 million market order, which is the biggest I can remember up until that point. They added to that shortly after, got it up to 21 million, and then there was a little bit of selling on that dip, and then I think this was yesterday. Look at this. So they were at 25 million coming into that when we approached this. There was 75 million in ask liquidity up at the 70K level. And look at this move from 25 million was their net of buying and selling to this point was at 25 million. And they just, boom, $20 million market buy, and then backed it up with even more. So, now up to 50 million, and then continued to stack a little bit of selling on the dip and then back on. That doesn't necessarily mean that it's one entity doing all of these moves, but one move like this, and you can really isolate it on the brown mega whale class because they trade so infrequently. One move, $10 million or $20 million, that's one move. Whether the following moves were from the same entity or not, I can't track that. But this is how we use CBD. The normalized view is really just to give you a sense of, make it easy to spot the moves and to give you a sense of what order classes are doing what. And as Mark had mentioned, he feels like yellow is retail. I'll be honest with you, in the beginning, it was really clear that yellow was retail, but over time, with the amount of volume, retail is not TWAPing out billions of dollars, right? And so I think at this point, sure, retail lives in that class, but the institutions are playing their game using every bin that they that they deem necessary at this point. And the big ones that I've been watching have been red, purple, and brown. Red's really ramping up the volume here, and obviously that's got to be an institutional size entity. They're doing that strategy with that size orders to minimize the slippage. And if it's a TWAP strategy, and I'll tell you what makes me think it's a TWAP strategy is really just the see how purple has a lot of volatility to it, and red does not, and yellow does not. So that to me means that over time, these guys are really just methodically either distributing as yellow is or accumulating as red is. And the contours of volatility that you see in there would be other traders getting involved, retail getting involved in those order classes as well. But I think that they're primarily dominated by large institutions at this point.
It's amazing how much information you can get from the fire charts.
Yeah, I mean, especially when we're in price discovery, I don't have any structure to really rely on.
Right.
Then I'm looking at liquidity to give me a clue of whether I think price is going to move up or move down on the short term. And I'm trading less in terms of Bitcoin, anyways. To Corio's point, I'm doing less trading of Bitcoin and more accumulating at strategic levels. When I get pullbacks, I'm using my mean reversion indicator to buy incrementally and just add those to the hold stack. The alts, I'm looking for opportunities. Whether obviously if I can get them on the breakout, that's great. But if not, there's still plenty of upside. We talked about some of the coins like XRP and Bitcoin yesterday. I'll show you those really quick. Let's see, those were huge moves, but I didn't expect it to. Well, actually, I think that Litecoin has lots of room left to run. I did sell it. I did just, I pushed my trailing stop loss up in profit. So it closed on me overnight, but I bought back this morning. I think I closed it like 104 or 105, and I bought back down here. So I'm pretty happy with that. I think it's got a chance to run and maybe work its way through the golden pocket. XRP.
Wait, Keith, are you showing us the Litecoin chart? I see your Bitcoin still.
Oh, hang on a second.
Okay.
How about now?
I see Litecoin now. Yep.
Okay. So yeah, Litecoin had a 20% candle yesterday, and they were doing their end zone dance, and Jen commented on one of my remarks to that. But I was like, come on, I know it's been a while, but act like you've been here before. And so people are reluctant to trade when they see a big move and they go, well, I already missed it. Well, you missed a nice move, but there could still be a lot of meat left on the bone. So even if things topped out at the prior high from here, well, we're down here now, right? So even if things top out, that's still a nice 18-20% move from here. And then if you get to the bottom of the golden pocket, that's a 33% move. And if you get up to the top of the golden pocket, that's a 76% move from here. So there's still a lot of potential in that trade for me. So that's why I'm back in it. I'm not sure I share the same way. I said I'm not sure I feel the same way about XRP. What am I doing? I don't want to do it on this chart. I want to do it on this chart.
You also said at one point you were trading a little Doge. Are you still trading a little Doge now?
I closed that position too. Same thing. I have a tendency to be very conservative with those, and I am happy to take the money and run and look for new entries. Interesting, move for XRP yesterday, breakout candle, giant, big green celery stick. And then it pulled back here back to, I drew this micro trend line to see where things would go. And so it gave a bit back, and now it's trying to fight its way back in. Getting in and out of these is a little bit of a risk, right? Because you have no guarantee that you're going to get an entry that's back in better than where you sold. And sometimes I win them, sometimes I don't. But if there's enough upside left, then I don't mind buying back in. I personally don't have the same confidence in XRP that I have in Litecoin, so I'm not rushing to get back into this one. I was underwater in it for a long time. I recovered that, and I'm happy to walk away and look for a better place to put my money. But that's just me. You guys do what works for you. Nothing I'm sharing here should be considered advice. You know the deal. It's risky. Do what works for you.
Well, finding an approach that works for you is probably why you're still here, because you've been doing this for quite some time, right? And it's like you guys always say, like, I always think, especially now after the call, there are so many different narratives that you can, that rotate out, right? So you can miss all of these different narratives, but trying to chase them is, I know that I have found myself at a huge loss because I jumped into one of these big narratives that, this was before I had done all of my research or, had known about Corio's new dashboards and things like that, where the timing was completely off. I chased it and I lost a good amount. Whereas if I had just said, I'm happy for all of those that are winning on this at the moment, I'm okay to sit this one out and I'll wait for the next opportunity, I would have found myself in a way better position than I did at the time.
I think it comes down to understanding what you're doing, right? Take the time to, if you're gonna do it blind, if you're flying blind, and I'll admit I'm intrigued by what Corio shares with us, and I did take a little flyer on a GameFi token after reading before we started the broadcast here, or before we started the recording here. But I did it with a very small position, right? I had closed some positions last night. I had some capital I wanted to put to work, and I'm willing to take a little bit of risk on a coin like that has a potential to give some big returns. Probably right. What will happen is, because it was a small position, it will go through the roof. If I had a big position, it would go down. But seriously, it comes down to having confidence, finding the data or the narratives or whatever it is that you understand, and so that you're making decisions based on your own understanding of the situation, whether it's the narrative, whether it's the technical analysis, whether it's the fundamentals, whatever it is. Know what the fuck you're doing. And if you don't, take the time to learn it. Somebody in our community who's not a subscriber to Fire Charts, but was asking about some data that we post some free charts in the Telegram channel that are 2-week resolution. And he was asking, how come we couldn't see a certain move? And I'm like, well, this is a 2-week chart. If subscribers can, there's more data available in the live charts when you subscribe. That's pretty common for most people to understand. And his comment was like, well, with all the data you have, you probably never lose. You never get it wrong. That's not true. We do get it wrong sometimes. And anybody who says that they're never wrong is probably lying to you. But yes, I do credit a lot of the successes I've had to using this data and learning how to use this data in the order book and order flow data. But I also credit the years of experience that I have learning lessons the hard and expensive way. Once you get your teeth kicked in 1 or 3 times, sometimes it takes me a little longer. Sometimes I don't get it the first time. I need to take another hit. But once you learn, there's no shame in those losses if you learn from those losses and you understand why not to repeat those mistakes. So document what you're doing, when you screw up, when you make a mistake, don't wallow in pity. Understand what went wrong and what you need to do differently next time.
Yeah, absolutely. I love it. I think that's a great place to call it. Corio, do you have anything you want to add to that?
No, it was really helpful and insightful to hear Keith comments on his fire charts and see the activity that whales are doing in different cohorts. I really love that, we can see, what different cohorts with different capitals are doing, and nothing adds to that.
It's kind of neat to see the crossover though with you guys right now.
Yes,
I will say that,
I mean, we both specialize in very different ways, and I'm glad that we are doing this call since month, because I'm learning his stuff, and maybe Keith is learning some new stuff. And this,
I have a video. I have had the YouTube tab open for 3 days now, trying to watch your video, and I've not had the time, but I am going to watch it because I really want to learn more about navigating the dashboard, because the data there is
incredible.
It's incredible. It's super valuable, right? And if you try and absorb the whole thing, you're going to be overwhelmed. But if you can find something that you can gravitate to and you can understand, then you can trade that. And so that's what I'm doing. Hey, looky! It looks like my mean reversion indicator is just buying a dip for me. So I got that going for me, which is nice.
Nice.
That's very nice. That's your favorite now. It's kind of really quickly, before we call it, what you were saying about Corio's dashboard is so true, right? I mean, about anything, about any of the tools, about any of the indicators, and TA in general, right? You guys have both said it. You can look at the daily, the weekly, the hourly, the monthly, whatever it is. You find what works for you, right? And you kind of stick with that. The mean reversion indicator that you were just mentioned, I know that was Brad's favorite, right? Your co-founder.
Yes.
Is that kind of the one that you tend to lean towards also?
This is, I every time I turn this thing off, I wonder why the hell I've turned it off, because it really, really produces. I'll show you just real quick. It says I have a connection issue, but so I set this thing actually with a couple of different deviations, because you never know what kind of dip you're going to get, and I like to be able to, run different strategies, and I do so with different, kind of different size trades. Let me share that one really quick. Here we go. So this is just a 1% deviation from mean, which is not very big, but we haven't been getting very large dips lately. I run a grid, as you can see. I can run different deviations here, and I can run as many of them as I want, and I just set up my bots, for each deviation. But this, for those who aren't familiar with mean reversion, it's very simple. Let me just go to one grid here to make it clear and simple for you guys. Price likes to return to mean. If the white line here is mean, okay, whether price moves away from it or to the upside or to the downside, it likes to spring back. So this is a very tight 0.5% deviation, which isn't very much. But again, I've got some small positions going to this just to incrementally build along the way. And as you can see, over time, that has paid off. Sometimes it'll dip down lower, and I just DCA those into one position. And this is also why I run multiple deviations at one time. So here's now I added a 1% deviation. Here's a 2% deviation. And so, I'll pick them up in this environment because I'm trying to accumulate more Bitcoin. Typically, when I'm using these low deviations, I'm just using it to scalp, right? So I'm in and I'm out typically within a matter of hours, if not more than just a few days. So, depending on how deep I want to set these deviations, I can use it for a scalping strategy. I can use it for a swing trading strategy. And I've got one bot that goes, up to a, like deviation 18% from mean, that's going to buy those big, those big massive dips if we should happen to get one. And this, this works on anything you can get on TradingView, on anything you can load on TradingView. So it's pretty powerful. And what my next setup is going to be is to look for some setups that I can trade Bitcoin against alts so that I can start printing more Bitcoin as we move through this market.
Nice. I think that that was Mark's walkthrough last week,
right?
If I'm not mistaken. I think it was Rep Bitcoin and 1inch.
Right.
We'll have to take a look through. He had to drop early, so unfortunately he can't kind of show us how to do these sorts of things on chain. I was really hoping that he could take one of the memes, something from your dashboard, Corio, and kind of give us a little walkthrough of setting up an automated trading strategy. So maybe we'll start next week off with Mark.
Sure,
thank you guys so much. Yeah, thank you guys so much for giving us these walkthroughs and just kind of, letting us get into your heads, see what you're seeing and how you are reacting to it and what moves you're kind of making, and just for sharing everything that you do every week with us. It is extremely valuable. For all of anybody who's watching the video, I'm going to include in the description links to material indicators, to Corio's dashboard, along with their Twitter handles. So give them a follow if you're on Twitter. And yeah, definitely tune in every Tuesday we do this. So thank you guys so much. On a side note, in about a month or so is ETH Dubai. Token 2049 is going to be in Dubai. I will be there. I know Mark will be there with Bancor and Carbon DeFi. So if any of our audience is going to be there, definitely reach out to me. Thank you guys so much.
Carbon should fly us out and then we could do it live from there.
Yes, that's a great idea.
I'm going to be doing it live from there.
Hey, let's vote on that real quick. Corio, you good for that?
Yes, I'm voting.
Okay.
You know what? If I can get you guys tickets, because I'm actually going to be emceeing a couple of I think one day of ETH Dubai.
Nice.
We're going to have a booth there and some stuff. So, reach out, stop by. And if you guys can make it to Dubai, I don't know about sponsoring the flights and accommodations, but I might be able to get you guys tickets to the event. So yeah, there's that offer.
Thank you. I appreciate it. Cool. I appreciate it. Corey, I'm going to spend the next hour of my day watching you on video. So watching your video. So I'm looking forward to that.
Okay.
We haven't had enough of you, Corio.
Great, guys. See you next week.
All right.
We'll see
have
you
a good
next
one.
week.
Thanks, guys.
Bye.
Bye-bye.
See ya.